So paying taxes as an S corporation is tip number 5. So once again, it's an election that you make on an existing entity, okay? How you pay taxes now is that your entity, your LLC, your PLLC, or your corporation would have its own tax return. It files an 1120S tax return, but that tax return issues a form called a Schedule K-1. So that business tax return is a pass-through type of tax return, meaning that most of the taxes are still going to be paid by you personally. They're going to flow through or pass through to you as the individual. So the company in certain states could have a minimum fee that it has to pay, a minimum franchise tax or excise tax. But outside of that, the income taxes are still paid by you personally. So you're going to have 2 tax returns now. So that increases your tax prep costs, right? So you have the S corporation tax return, you have the K-1 flows into your personal return, and then the taxes are paid at your personal level, okay? So this is why when you have an S corporation and it's profitable and you're paying yourself your reasonable comp and you still have profit left, there's no taxes being taken out on that profit, but it's still going to flow to you your personal return, and you still will have taxes owed on that. And so that is why it's important that you still may have to make quarterly estimated tax payments even with an S corporation, okay? And there's definitely some strategies to implement to bring down that profitability that is left, different retirement planning options that you can put in place, accountable plans, different strategies that can be put in place to continue to bring that number down. But at the end of the day, having an S corporation doesn't mean you don't have to make quarterly estimated tax payments. You may still need to. The other option is that your W-2, the wage that you're paying yourself, you can bump up the withholding coming out of your paycheck every time you get paid to account for the profit in your business as well. So that's another way around it. You have more flexibility with an S corp where you can have the withholding done all that year end for that extra amount and avoid an estimated tax penalty. So there it is.